When applying for a mortgage, should I choose a fixed interest rate or a floating interest rate? Is the amortization period of 25 years better or 30 years better? Hi everyone, my name is Priscilla and I'm a real estate broker in GTA. Today, we're fortunate enough to have Boyi Leung, a mortgage manager from BMO, to share some tips when getting a mortgage.
Hi everyone.
Boyi, could you please tell us how we should choose interest rates when getting a mortgage? Is floating interest rate better or fixed interest rate better?
Many people ask me this question. Now, because of the whole epidemic situation, in Toronto, our floating interest rate is particularly low. It is around 1.55% to 1.60% at the moment, whereas fixed interest rate is around 2.3% to 2.4%, which is quite high in comparison. Based on the current situation, we usually recommend our clients to go with the floating interest rate because of its low interest rate and words from the central bank that they are not going to raise the interest rate in the next year or two. In other words, the interest rate won't start rising until 3 or 4 years down the road. Even when it does start rising, it's highly unlikely that it would reach 2.2% or 2.3%. By the time the floating interest rate reaches this number, it will pretty much be near the end of your mortgage term and when you need to renew your mortgage.
Okay.
But again, the choice is up to the client, and based on their situation, some more conservative clients may stick with the 2.3% fixed interest rate to keep their mortgage payment more predictable.
Right. This way they can avoid any uncertainties.
Yes, that's right. With the 1.6% floating interest rate, 1/3 of your month mortgage payment is going towards interest, and 2/3 is actually directly paying off your mortgage principal. If you look at this angle, for the first 3 years where the central bank does not raise interest rate, you are
enjoy the benefits of low interest rates.
That's right.
We can repay more of the principal amount during this time.
Yes.
Got it. But I have this problem. I am actually going through the mortgage renewal process myself right now. My mortgage term was 5 years with floating interest. So here's my concern. In the first 2 years, I also believe that the interest rate will remain relatively low. However, if the pandemic came to an end and the bank decides to raise the interest rate, how can I prevent my floating interest rate from rising too high and overwhelm me? Is there any chance that I can adjust it when it raises?
Yes. If you have chosen the fixed interest rate, there's no option for you to change it to floating interest rate during your mortgage term. However, if you chose floating interest rate, you have the option to change it to fixed interest rate at any time. The only requirement is that you must stick with the fixed interest rate for the remaining term of your mortgage.
I think this opens a window for many people because I didn't know before that for a 5-year floating interest rate mortgage term, I can change it to fixed interest rate at any time based on situation. Boyi, let's talk about amortization periods. When choosing amortization period, which is better, 25 years or 30 years?
Personally, I would suggest 30 years. The reason is that for the 5 major banks, each bank has a prepayment program, which gives you a quota of sum you can pay directly towards your principal amount without any fine. So, with the 30-year amortization period, you can turn it into 25 years if you would like by making prepayments.
Extending on previous question, you just said that during the 30-year amortization period, we can repay the principal early to reduce our amortization period to 25 years. That relieves us from some of the interest payments. But why can't I use this method with the 25-year amortization period?
While for the 25-year amortization period, your monthly payment is going to be higher. At the same time, if you have limited income, then the 25-year amortization is more limiting on your borrowing power.
So my understanding is this. Tell me if I'm wrong. When choose the 25-year amortization period, we are going to have a higher monthly payment. So I may not have enough excess funds to make repayment towards principal. Whereas when our amortization period is 30 years, my monthly payment is lower, and I may have more surplus of money. Make prepayments towards the principal early.
Yes.
All right. Thank you very much, Bowie.